Sven, what say you? I mean, there's been no volume in the market. Is that a good or a bad thing for the equity markets right now?
Hi, Brian. Well, and typically what you see is volume declining during rallies. And obviously when you have sell-offs, that's when volume kicks into the downside. What we're seeing, though, right now is really unusual. I mean, for October, usually you have more volatility. But last week, we actually had the lowest volume, as far as I can tell, ever, not only in October, but generally. I mean, usually you get that type of volume during like a holiday week, half day, and that sort of thing, but not at all. Totally lack of interest. So what that tells me is that, even though we may rally on the Fed here, there's no real support being built in this market, and that's a concern, especially as we keep gapping up, right? So we again, like in the previous time, see a lot of unfilled gaps, and they tend to want to fill at some point. So if you see volume come in, any type of sell program, then of course you can get downside. For now, as long as that's not the case, we can drift higher. And what's interesting here is that basically the last few months we haven't done anything other than reach these highs as soon as the Fed meeting comes, right? The Fed cuts rates, then we sell off, we get a volatility spike after this VIX compression that we see again now. The only question now is this going to be different where we can actually sustain highs? So far, highs above 3,000 have been selling opportunities, and we have to see if they can actually sustain above these levels here.
I feel like we're going to have to go back in history because, Sven, about 8 years ago, my former colleague Mandy Drury and I coined the term hopium, talking about the market sort of being addicted to the Fed and rate cuts and sort of optimism around it, whether you believed it fundamentally or not. It looks like from that chart, we move up, rate cut, then the markets get a little complacent, then we talk about a rate cut, and the markets go up. How much of this is, I guess, I got to bring it back, that sort of Fed hopium, if you will, that they're going to rescue us or save us?
Well, markets have been trained to follow the Fed. I mean, that's literally what all 2019 has been all about. It's been multiple expansion. And what's really interesting here at this particular point in time, and I really want to make sure people are aware of this, the Fed has been throwing liquidity around like candy at a kid's Halloween party ever since September 17th, when something happened. Overnight, the funds rate overnight jumped suddenly over 5%. The Fed did not anticipate that, and they had to intervene with repurchase operations, okay? And at that point, it was initially indicated to be temporary, and it was set at $75 billion a day, right? They had that repo facility, and that kept going. They had to extend it. In early October, all of a sudden, they announced a $60 billion a month Treasury bill buyback program. Not QE, they're insisting on it, but it's a massive amount of money. It equals the size of the U.S. military budget. Absolutely unfathomable. And on last week, all of a sudden, they increased the overnight facility, repo facility, from $75 billion to $120 billion. On Thursday, they intervened by over $130 billion. And boom, all of a sudden, we see markets make new all-time highs.